Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us as always to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Really a short program for us today in this holiday shortened week. To kick things off, let's recap what happened this week in the markets.
On the cattle side of the equation this week, cash cattle were down about $1.60 for the week. Those feeder cattle markets were anywhere from $2 to $7 higher on the week. Cattle futures were higher with the June live cattle futures contract up $2.70 and the August feeder cattle contract up $6.40 on the week. Choice box beef prices continued to fall this week, down nearly $31. That's still $150 plus of where they were a year ago at this time. On the hog side of the equation, cash barrel and gut prices a little more than $4 lower this week. But the June lean hog futures contract was down $2.40 for the week. And we also lost on the pork cutout value. It was down $8.30. And, you know, most of the time we always talk about bellies being what causes pork cutout value to move around. But this week, the lower pork cutout value is really due to loins and ribs. So curious to watch, especially loins, as maybe we're seeing some of the away from home consumption starting to go up, which may not favor what's been happening on the loin side.
I want to talk to, we've seen these drastic and very dramatic declines in box beef prices in recent weeks. Now, normally we would probably talk about that influencing what's going on market-wise and prices as well. But for the most part, it seems like cattle prices have been able to hold on despite these big declines. Is that to be expected with what's been going on and the volatility in the box beef prices?
So I don't think it's completely unexpected, Megan, just given where we've been. I look back and I go crazy wide margins that resulted as slaughter was curtailed, beef supply short in some cases. To me, we're almost heading, if there's anything that's normal anymore, something back closer to normal in terms of what we're seeing. And we have a long ways to go. I mean, I remind you that, you know, we're setting at $3.75 a pound choice box beef. That's still very high. But to me, we're, again, finding maybe what's getting closer back to what we might consider more normal. I hate to use that term just given everything that's been at play, but not surprising.
All right, let's talk slaughter totals. As we take a look at this week, numbers are down and they've been on an increase, but just a reminder, we are on a holiday shortened weekend. They did not run a full schedule on Monday.
Yeah, so I think it is important. You know, I talked about curious what Monday was going to be like, and it looks like everything was shut down for the most part on Monday. I remind us that these processors have been running labor pretty hard since many of them have come back online, and so I'm not completely surprised to see a day off. Again, it gives those plants a chance to clean and so forth as well. But cattle slaughter for the week down 5.6%, hog slaughter down 8%. Those may seem like big declines, but I just remind us relative to a year ago, we're now talking about cattle slaughter that's down almost 11% and hog slaughter that's down 7.7% relative to a year ago. I think we would have never imagined those kinds of numbers just a few weeks ago in terms of what's going on. And, you know, if USDA is right, we're going to make a big run tomorrow. 302 on the hog side is what's being estimated, and 83,000 on the cattle side. That's almost a weekday kind of run. So good news, despite we are seeing a few cases with the Storm Lake plant shut down here for a short period of time on the hog side that is maybe not so positive, but still, I just remind us that it's a much better position than we would have thought we would have been in at this point in time.
And we talked about that. We did an update on our webinar series that we've been covering about the impact of COVID-19 on the ag sector and a pork update earlier this week. And we talked about how surprised everyone really is at the ability for the processing sector to rebound as quickly as it has, and to be able to get these numbers not too far off of where they are typically.
So to me, it's always amazing how economics tends to work. I jokingly say that today, Megan, but there was some big incentives on the part of processors to increase numbers when you look at the profitability that appeared to be there for those few weeks where we had either very strong pork cutout values and lower hog prices. Same for cattle. I think it's helped that recovery. Now, I think it's important, especially in hogs, to remind ourselves, maybe we could say we're breaking even right now, but that's about the best we can say. And the fact we've probably got 2+ million head of hogs to try to work through in backlog, it's far from over, and it's going to take us a while to get there. Same thing on cattle. You know, we might not have a bunch of heavyweight cattle left, but we got a lot of cattle that have been slowed in terms of getting to the feed yard, et cetera, that we're going to pay the price for as we go through the remainder of this year.
All right, let's talk trade. Really, for the most part, and we're going to touch on this in two separate aspects. For the most part, weekly trade data has been continuing to show some promise. I think last week we were down significantly, but for the most part, we've seen some pretty positive weekly export sales reports coming out of the USDA. As we look at that, how does that fall into the big picture as we prepare for next week's monthly trade data?
Yeah, so I do think there's still a lot of positive, and I look at both pork especially, but beef as well is still not terrible. You look at pork exports, even though we've maybe come down a little bit of late, it seems to me that we're in a good situation with some growth still headed, especially relative to 2019. You know, so we're talking about weekly exports in that 35,000 metric ton range. We were 25,000 metric tons a year ago at this time. So things moving in the right direction. Maybe some concern given some of the news that's starting to come out on the China side. But by and large, I still think exports could be what helps us as we go through the remainder of 2020.
And we should probably talk a little bit about that as well. Right before we started this afternoon, the president commented on all things China and Hong Kong. While those actions weren't necessarily directed towards the ag sector, does that have some potential to impact ag exports and our phase one trade deal that we're working hard to meet the goals of those?
Yeah, so I do have some concern that it could hurt phase one. You know, so if the Chinese decide they don't want to meet that phase one deal, how do we hold them to it? And given that you know, we've increased the pressure in some other areas, again, unrelated to ag, I'm not sure where that plays out. But from a pork perspective in particular, I think we've continued to see some positive news in terms of Chinese trade taking our U.S. pork. And if that were to change, that puts a little dull on the otherwise shine that we've seen on export markets. So we're going to have to watch that. It's pretty early in the process, but we've certainly increased the pressure on some other issues that could hurt us on that phase one deal.
One of the other reports coming out next week is a jobs report. We saw the unemployment data come out again this week. We've been watching those numbers pretty closely, but it seems like they're starting to at least slow. Is that a positive sign potentially, or can we take that as a positive sign that maybe we've hit the bottom and we're going to start to U or hopefully V in that positive direction?
Yeah. So you made me smile because it's interesting that we're talking about a smaller loss of jobs being a positive, just given everything that we've been through. When last year at this time we might have been talking about jobs continue to grow and unemployment rates at record low levels. So it's amazing what a COVID-19 event has done to us. But yes, I am hopeful, just as I think we've been talking about maybe we found the bottom in terms of livestock markets generally. that maybe we're starting to find the bottom in terms of unemployment, et cetera, more general economic indicators. I say that because, again, as we open or try to open as a result of the COVID-19 shutdown, if we can start to get people with jobs again and they transition back into that workforce, more money in the pocket, how does that help us from an ag perspective? I'm really interested in that piece of this. I think there's some positives as we get, at least temporarily, some stronger demand pull as we reopen and maybe find folks with more jobs. So I can get excited about that. It's my more positive to then, as I think the general economy drags out of the COVID-19 issue, I become more concerned. But let's take the positive as we can right now.
One more positive that I'm going to throw at you. Monday was Memorial Day, the unofficial start or the official start to the grilling season. Even though we're seeing maybe some more restrictions and not the opening as quickly as people would like to see, does that potentially give us the opportunity to see a consumer demand pull there as well, as maybe folks turn to grilling out and outdoors grilling during these summer months?
Yeah, I think it does. And in fact, I think folks are going to be looking for those opportunities to get out. They're going to have felt cooped up and unable to move around, and maybe they can't find the situation as open in their part of the world as they would like, but yet they might be able to go outside and grill some good beef or pork products, and we know it's that time of year. So I do think we'll get some demand help on that side as well. I guess my concern is where retail prices go for them as well, and does that put any damper on it? But I think we've got a lot of folks ready to get out.
I'm just trying to find some sunshine right now. That's what I'm looking for.
I understand completely. Again, I will say it's actually nice that we have a chance to not have a lot of negative news. It seems like that's all we've been focused on in terms of as COVID's has unfolded over the last several weeks, to beginning to start that upward recovery that I hope lasts for several weeks to come.
I would like to consider myself the eternal optimist. Scott, we alluded to him earlier. Look ahead at next week's major reports.
Yes, so we'll at the end of the week get monthly trade data out next week, as well as then finish the week with a jobs report. Both those are going to be critical in terms of the demand side of the picture for beef and pork.
Well, hopefully we get to continue a positive conversation next Friday. Have a great weekend. We'll talk to you then.
That sounds great, Megan.
Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can submit questions and comments there as well as for those of you that are watching on our Facebook live feed. For market updates twice daily, check out John Perkins' Market Minute. And for all of the really great podcasts that Brownfield is providing, visit our website, brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.